it's been a sad day on the markets, I would say. We're down around 0.5%, in fact 0.6% down for today. Resource 20 under pressure. In fact, we saw losses coming through all round. This is despite the fact that we saw some positivity in Europe and, of course, a positive start to the US trading session as well. What is driving our market today?
Yeah, I think our market's taking their cue from the lower resource prices. We saw gold and platinum prices off. I think the news out of Zim also wasn't doing too much good for the likes of Impala. That really set the tone, and then we saw a couple of the big stocks like Anglo's going ex-dividend, so that was also a few rand on the back of that. So overall, a pretty lackluster day, down about 0.7% when I left the desk, and on mediocre volumes of about 6 billion.
Let's quickly zoom into that story when it comes to Zimbabwe and the platinum miners. And we've got Implats that was down around 3% in today's session. Robert Mugabe pushing ahead when it comes to indigenization, and of course the fact that we're going to be seeing a lot of those foreign-owned companies selling quite hefty stakes to blacks in the country. How do you think that is going to be taken up going forward? Because the knee-jerk reaction is that losses came to the fore, but 3% perhaps is pretty decent given the fact that we've also seen platinum coming under pressure today.
Yeah, this is not a new story. I mean, we've been hearing this bandied around for a while. If you have a look at, for example, the Implats price, the analysts would say that, you know, it's pretty much discounted into the price already. So a little bit of a knee-jerk reaction. I mean, 3% is not that significant given that the platinum price was also down around $20 on the day. But certainly not good news, and we'd like to see a little bit more certainty coming out of Zim. I think the timeline they're talking about is also very, very thin.
Let's delve into the likes of Harmony, which has also been relatively volatile last week. I mean, we saw it coming under pressure on Friday, but then that said, 19% increase for the whole week. Overall today, pretty much a flat performance. What does that say about all the speculation that has been surrounding the company? Do you think that this stock perhaps is going to increase further and see a share price increase on the back of a lot of optimism surrounding the Papua New Guinea assets?
Yeah, look, I mean, I think the stock's actually done quite well to hold on to those levels. It was one analyst coming out saying that he felt that there could be an acquisition target. We then had the company saying that that wasn't the case, that there weren't any talks. So I actually would have thought the stock would have moderated a little bit more. Personally, I wouldn't be jumping in at these levels. I think, you know, if you were long and you've had a little bit of a nice run up, fantastic for you. But, you know, leave this one to the speculators.
Let's delve into the likes of Vodacom, new branding to be unveiled later this week, and this also adding a flurry of optimism. You mentioned that MTN went ex-div today, so that stock was under pressure. The play between the likes of Vodacom and MTN, Brett?
Well, it really depends on if you want sort of like the ex-growth story, which would be Vodacom really focused on the South African business, going to grow more through the data side of the business, or MTN, more risk. You know, my pick would be MTN over Vodacom personally.
Also, just focusing on the other end of the spectrum, it seems that we have seen resources coming under a bit of pressure on the back of commodity prices falling as well. But would you say that the commodity story is very much intact, Brett?
No, that story is going to be playing out for the rest of our lives. In fact, I think Anglo's and Billy's at current levels are offering quite a nice entry. I mean, we had Anglo's on the back of very good results being up near 400 Rand. You're seeing it around 350 at the moment. Billitson was up near 300 Rand, also after good results. That's around 260. So, you know, if you're looking for a little bit of a play, I think those two offering value at current levels.
Brett, let's move over to the overall story on the global level. I mean, I can hear that you're quite an optimist. Taking a look at all the troubles that have come to the fore, and I know we chatted a bit this morning as well, Europe, Japan, the US, the end of quantitative easing too, that could come to the fore by June. Is that creating a bit of worry when you look at portfolio and asset allocation?
Yeah, look, I think at the end of the day, I'd prefer not to see QE3 because I think then the markets are getting a little bit hooked on the stimulus, and then, you know, that has to be withdrawn at a point. I think you're seeing good growth numbers come out of the States, and they certainly seem to be a better story between the States and Europe. We're seeing GDP numbers coming out better than expected. We're seeing consumption numbers that were actually better than expected as well. So I think the US story is looking quite good. And if you have a look at the market, now that we've discounted the tsunami in Japan, that's almost back near its highs for the US market. So that's looking fairly bullish going forward. I don't, on the other hand, I expect that we're going to be seeing double-digit gains for the rest of the year out of the US market. But certainly I'd be on the long side.
In terms of volumes, we were talking about sort of lackluster volumes that have come to the fore today. Last week we saw pretty much the same picture. When do you expect that to pick up? We keep talking about excess liquidity and that the markets are ready for a flurry of money. We haven't really seen that feeding through over the last couple of weeks. Do you think most investors are sitting on the sidelines to get some kind of clarity, not only from Europe but also the Asian scenario, and of course Middle East is still very much on the top of the agenda for most of these investors, it seems?
Yeah. You know, we could be in for a bit of a quiet period for a while now. April, obviously, with all the public holidays, is going to be a bit of a troublesome time. Then we go into May, which is the old sell in May, go away kind of syndrome. And then we hit the European summer. So this could be the beginning of a trend that we see sort of out for the next 3 or 4 months. So I think that's why you're seeing the market kind of hovering, not really pushing too much in either direction.
Bidvest, you mentioned they went to ex-div today, down 2.25%, sitting at 146 Rand 55. Would you be buying at these levels?
I'd have it as a hold at current levels.
Naspers, down 1.6%, 382 Rand. Your view?
I like Naspers. I would look to accumulate on a little bit more weakness. We've seen some weakness on 10 cent. So Naspers for me becomes a buy in sort of the mid 350s. At current levels a hold, and I'd be selling